South African Reserve Bank Governor Lesetia Keyago has announced increased repo rates by a whopping 50 basis points, bringing it up to 7.75. This is double what some economists had predicted, making it the ninth consecutive increase since November 2021, a repo rate hike of 50 basis points. Keyago said that high inflation, persistent load shedding, global geopolitical tensions, as well as elevated global price levels were the main drivers of the latest hike. Let's have a chat on this. Joining us now is Professor Bonki Dumisa. Thank you so much, Prof. Yet another repo increase. How much more pain, or how much more really, can the South African people take?
Well, South African people are not the only people to suffer the global inflation effects. You must remember that the inflation in the United Kingdom is over 9%. In the United Kingdom, in the European Union, it is over 10%. In the US, it has moved from 8.2% down to 6%. So in South Africa, we are not different. What I can say is, you said many people were saying there was going to be a repo rate a repo rate increase of 25 basis points. Yes, I must concede I was one of the few that said the repo rate was going to increase by 50 basis points. And the reason for that, up until last week on Tuesday, I was also singing the same song that the Reserve Bank was going to increase the repo rate by 25%. But when the latest CPI, Consumer Price Index figures or inflation figures showed that the inflation in February had moved slightly up from 6.9% in January to 7% in February. That's when I said, knowing how the Monetary Policy Committee of South Africa is so dogmatic about the repo rate increase, this slight increase was going to lead to a 50 basis points. Wow. All is history. They actually made that decision. It is not a decision that they made lightly. The South African Reserve Bank has got only one mandate when it comes to monetary policy, and that is they manage the inflation rate through the repo rate cuts or repo rate increases. And as you have said, that the repo rate increases started early last year and they're still continuing. This was the ninth one. Right. It is because you remember that the Russian invasion of Ukraine on the 24th of February 2022 ushered in significant fuel price increases because the world was not so sure if ever there was going to be a very serious shortage of crude oil. And that's the reason why we're still stuck on that. And they also have what they call the inflation target range of 3 to 6%. As our inflation in South Africa is at 7%, it means it is far higher than the midpoint of the 3 to 6% target inflation rate.
Very well. So I just want us to look at two things now, whether or not this inflationary targeting measure is working, and you know, how else would people experience this increase by the MPC in their daily lives?
It is going to be significant because the implication of the repo rate increase means that as it has risen to 7.75%, then the businesses always at 3.5% over and above this, so which to get what we call the prime overdraft lending rate. And it means the prime overdraft lending rate is going to move up to 11.25%. It is at that interest rate level then that home loan interest rates motor car insurance interest rates and other loans are actually based. So when this happens, it has a negative multiplier effect on the cost of many things in South Africa, if not on everything, especially now that the food inflation in South Africa is at above 13.8%, and which means the people who are affected significantly and the most are the low income groups and the poor people. That is the net negative effect on the economy.
What should people expect to see change in their daily transactions with the new rates?
Well, within the next 72 hours, they're going to get letters from their financial institutions informing them that your mortgage bond has increased and expect a higher installment this month. When I say this month, from April onwards. And the people who own cars, they will find that they get such letters saying your car installments will increase because of this. And many people are already losing houses, and many people are already losing their cars because of these repo rate increases. And it does not look like our inflation rate is going to go down soon. So we must expect this pain to continue for a long time. The Reserve Bank Governor, Isija Kganyago, actually said that we must only expect the repo rate cuts maybe to start by the fourth quarter of next year, not this year. Well, so the painful journey is still long.
Well, thank you so much for your time here, Professor Dumisa. I appreciate your insight.
Thank you.